I like driving in my car. Beep, 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 beep. It's not quite a Jaguar. Beep, 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 beep. I like driving in my car. Well, I might like driving it, but I certainly don't like buying one. I'll touch on that later. Well, good afternoon, one and all. Saturday, so it must be coffee with Scruff. So, what are we doing with this one? Well, I'm going to update the Vanguard because it's the first of the month. My God, where has this month gone? Or where's this year going? And show you what compounding effects can do. But before I do that, I'm going to kind of give you some thoughts on about what homework and actually due diligence is all about. Without it, you might as well just give up. Let me explain. And a warm welcome to one and all. So today's coffee with Scruff, if you've never seen me before, you might find it a bit odd. Just to recap before what I was saying before the intro, I'm going to show you what the effects of a small account can do for you. And I'll pull up a sort of Vanguard tracker that I put my profits into, and then I'll show you how I'm going to set up one of the sheets because it's beginning of the month. But I said I wanted to kind of touch on things. Now, if you read the press, it's kind of muted that it's a 90% failure rate. There's a thing called the 390s in trading. 90% of money, 90% of people will lose 90% of their money in 90 days. It's the 390s. Now, if you look on most brokers, they now advertise who makes money and who doesn't. It's like 70% don't make money, 80% don't make money. One of the things that they don't tell you is how many are just trying it once, how many don't have any education, how many have only just been starting in a week. So sometimes the figures can be a bit flawed. But then I started thinking about this, about the messages I get all the time. And the messages are always the same. They never tell me who they are. They never tell me any of their experience. It's just normally a couple of words. How do I get in? And it's literally that. I'm looking at pound USD. How would I get into it? Well, you get into it with a flick of a button. It's that simple. Then there's talk, why am I failing? Well, I don't know why you're failing because you haven't told me anything about you. I don't know what your trading style is, how many trades you take. Nothing. All right. So it's all kind of wishy-washy. Right? But what it does tell me is they've put zero effort or education into the job. Now, I'm going to put this into an analogy because being out looking, buying a car for Joanne, and all right, we're not spending sort of we are spending thousands of pounds. She's got a budget of around £15,000 to buy a car. Now, for me, to buy a runaround, that's a lot of money because I don't finance anything. If you go through my history, when my company collapsed, the one thing I said I would never do is finance anything ever again. So everything we've got, the bricks and mortar in the house, we bought the house outright. Every builder that came in to help us was paid for. The car I drive was paid for, and all that allows us to go on lots of holidays, right? So just cut long story short on that one. But you go in to a dealership, and a lot of these sort of young kids and everything, because they always seem to be young kids, they kind of turn their nose up at when you're looking at a car between £10,000 and £15,000, and I'm like thinking, you couldn't pull that out of your back pocket, you know. So show a little bit of respect. And what I mean by that is, I mean, we're in a dealership today, and we're talking name brand dealerships, you know, like Nissan and Vauxhall and things like that. And to be honest, how they survive is beyond me. I do know they have high running costs and everything. But if you walk in and somebody doesn't even take the effort to walk across to you and introduce themselves and say, can I help you? Instead, they just bellow across the forecourt or bellow across the showroom. What you spending? Well, first of all, they've done zero homework. They don't know me from Adam, so they don't know roughly what they're doing. They're making an assumption. So, and let's be honest, when I'm out, I look like I've just been pulled through a bush backwards. You know, it's just the way I am. So, in that sense, is trading similar in that you're making assumptions? Now, case in point, I worked in sales for a long time. You know, I did quite well before I went into my own business. And my own business was still sales because you've still got to sell a service. I would never dream of treating a customer like that. I just wouldn't, you know. And when you finally do get somebody who will come up and walk with you, and it's the first question is, oh, how much are you willing to spend? That's the one question you shouldn't be asking, because all that tells me is you're not interested in what I'm looking to buy. You're just interested in what you're going to get. Trading is the same. That's kind of like your position sizes. I've got to get, what position size can I get in? Oh, what's the leverage so I can put a bigger position size in? You failed before you've even started. What they should be asking is, do you know what you're looking for? No. Okay. Do you know what type of car you're looking for? Not really. Well, what's the use of the car? Oh, it's going to be a runaround. Okay. So straight away, they've built up a profile. Who's the car for? Well, it's for Joanne. She's only little, likes a little car. Okay. So suddenly, instead of looking at sort of a grip big 4x4, it's really just a little runaround. And you haven't decided to discuss price yet. You've actually done your homework a little bit of due diligence, but you're also funneling down where you're going. You know, because there's no point going on one side of the forecourt with all the 4x4s if what they're looking for is a Nissan Juke, which is actually what she is looking for. And she's got her eye on maybe the Vauxhall Corsa as well. And she's weighing up the pros and cons as to, well, I can get a Vauxhall Corsa that's virtually brand new, or a Juke that's a couple of years old. So that's her decision. But the salesperson should be funneling down into where they go. And right, well, this is the range we've got. They range from 4,000 to 12,000. Is there any sort of specs that you like inside the car? You know, do you want leather seats? Do you want it automatic? Does it want 4 doors? This is what I would do all the way through, you know, and I used to find out what was right for the customer before it was right for me. Because if I got them right, I'll be looked after. Trading is identical. You look at all of the elements of the trade till it's right. And the money is just the byproduct of doing the job, not the other way around. So where am I going with this? Well, like I said, most of the messages I get are, show me the in. Doesn't matter about the in. The in is easy. What you should be worried about is how far can the target go, how far can the stop go, and what's the direction. If you've got them 3 elements in place, when you go into market, your ducks are in a row. How much is it going to cost? Well, the stop will tell you that. How much am I going to get out of it? Your target will tell you that. But what's it based on? The account size. And the account size will determine the position size, which determines the trade in the first place. Is it worth it? So I kind of just wanted to throw that out, and I'll be interested in what you put in the comments, simply because everybody has a different idea. But I'm asked constantly, your hit rate's good, your hit rate's good, your hit rate's good. Yeah, and if you're in the squad, they see it every day. And I even show them the statements. If we're in a live, and I don't particularly like showing my personal stuff publicly and one thing and another, but we'll be sitting talking and be having a chat, and I'll just go, well, here, I'll show you. Poof, and I'll pull it up and I'll show them. Right? And they go, well, where's the losses? They are there. And if you go through this series of Coffee with Scruffs, I do regularly pull up a statement. You'll see my losses are very small because I kill them off. But there's another reason behind it. I've already done my homework. Trade once or twice a day. That's it. All right, I'll break the positions up, but that's all part of the trade as well. The money just looks after itself. So let's have a look, see what the money has to say, shall we? Okay. So we're setting this up. We're into March now. We see where it is. So for March, actually, I'll just have a quick slurp because we all know Scruffy likes a coffee. We'll see, we'll fly. You know, I'm holding quite a good success rate. And I'm going to be putting a bit of time into the web trader because I want to do something else for the guys with that as well. I'm going to pull that up in just a second. But at the moment, I want to build up and I want a minimum 800 quid baseline for next month. All right. This month, we got a decent wage out and paid for the spending money for Spain. I'm off to Spain in a couple of weeks' time, and if you've seen the last episode, took a good chunk of money out and there was a decent amount left, so I had enough to put into the Vanguard, and I also had a big chunk that basically took it out, drew everything down to the baseline of 750, and the surplus is my spending money for Spain, or at least it will be if I spell it right, for Spain. Okay, so I'm going to kind of try and do the same thing. I want to get the baseline up. Now the baseline is what you start the month with, and I always do this with my accounts. Take the surplus money out and I start with a baseline, build it up, take the money out, and then you do whatever you want with it. If you want to go on holiday, which you saw me do last month as well, I had a trip to the lodge again. January's wages paid for the lodge trip, and they put money in the Vanguard, and you saw it. February filled the Vanguard and is now going to pay for my spending money for this month's trip, because I like to go away a lot. Okay, so that's set up. That's what we're doing. Now we're already off and running with a few trades. I set it up yesterday afternoon actually, because I don't trade on a Friday too much. But there's a couple of opportunities presented themselves with the Bitcoin, and I thought, you know something, I'll do that. And then I was doing a bit this morning before I went out, and there they are. There we go. So I'm quite happy with that. Right. So what else am I doing? Well, I said I'm going to be looking at the web trader. So this is the web trader. Okay, or at least it will. No, it's not. Hold on. Well, I finished with this sheet, so I'll get rid of that one. I'm getting old, boys and girls. That's getting old. So that's what I've been running on the bull. Now this one is the one that we're running on the web trader, and I need to set a few things up for it. I haven't really done a great deal with it, to be honest. So we're going to carry that forward into March. I'm going to follow the same rule criteria. But this time, what I'm looking to do, and this is what I'm trying to do with the guys in the squad, is we're looking to increase our position sizes. Now, this one, we're up to 59p. So I'll put 59 in there. As long as it's between those figures, I'm fine. It should really be based on this one. But if I see something that's super duper, and because I'm doing short burst scalps, I'll up it to this. Okay. Reason being, the web trading normally starts at about 50p a position. Okay. So I've got no other choice but to increase it, but it won't exceed that. And what I'm looking to do is whatever this is, so it'll be a money target. Okay. But what I want to do is it's that times 10. Okay. So essentially what it is I'm doing an exercise of 10 pips a day will pay you. Now you can do 10 pips through 2 trades. So 5 pips here, 5 pips there. You can do it through 10 2-pip trades if that's what you want, or 5 2-pip trades. Doesn't matter as long as I hit 10 pips. And it's 10 pips, but based on that. So if I do 10 and it's 20 pence, well, I haven't hit the money target. So if that makes sense, essentially what I'm trying to do is 10 times whatever the position size is per day. And then that way, slowly compounded up, it'll start building bridges. And this will help you work around a day job. So that's what I'm going to be doing with that one. And that's what I'm going to do. So we'll call it squad builder. And I want to try and get it to 300 quid baseline. Okay. So that's what I'm going to be working on here. Now, 20% increase is reasonable. So that's about 55 quid. Give me a few quid and allow me to have a baseline at 300. Once I've got that up to about 500, what I'll start doing is I'll start getting the baselines 50 quid at a time up. Okay. Because I'm trading multiple accounts, I don't want to spread myself too thin. So that means the target, we'll just round that off, is 56. So the minimum will be 258 a day, but ideally I'm looking for about 590. Okay, so that's that bit. And then let's have a look at Vanguard. Okay, so this is Vanguard. It slipped back a little bit actually. Obviously there's a lot of things happening with the indices where they're dropping off a little bit. Am I worried about things like that? No. In fact, I think it's a good thing because I dollar cost average into these things anyway. So actually, as it goes down, that, to me, that's a good thing because it means I'm getting better prices as it goes down for it coming up. Now, this is connected to, I do have a sheet for this, which is on the bull. So if I pull that back, and there it is there. This is where we are. We started this on the 1st of January with £5.19. And what we've been doing is we've been putting the surplus profits in from the small accounts. And I do have a prop running as well. And I just drop bits of money in there. And the whole idea was to get it to 4.5 grand come the end of the year. Well, we're at 3,007 at the moment. So I'm quite happy. And in fact, this month we might actually smash through this. As long as I have a good month. You know, anything could happen. I could screw it up. But there we are. There's the growth rates of what's going on with it. And we put save the change in here, Black Bull there, web trader and prop. Okay. So that's what we're doing with that. Now, where is Vanguard? Vanguard's here. Okay. So if we look at the portfolio and we look at the investments, these are our holdings. What you'll see is the small account is the cash and this global all cap, which is running quite well. It's dropped down a little bit at the moment. I'm not overly too worried about that. Now, if we look at from year to date, we can see that there's a steady growth up. It's fantastic. And the rate of return at this moment is 14.1. So it is down to where it's been, but I wouldn't be worried about this at all. And then if we drop it down into the months, you'll kind of see. So yeah, you've got red marks all the way through. And my swing trading gets a little bit like that as well, because who knows what the future is? None of us, right? The only thing that matters is whether this column here is in green. If that's green, we good, because that means our cumulative returns are always positive. And up to now, from a year ago, haven't lost 1 year. Not at all. Cumulative has continued to go through, but the monthlies, well, they've taken a bit of a smack, and they took a big smack last month. But I don't chop and change. I just let it ride out. And I guess that's one of the morals of the story about I don't chop and change. I do the same thing day in, day out. I come to market, 6, 7 in the morning, prepare the charts that I'm looking at. I'm predominantly a pound trader. So I'll trade pound pairs, you know, pound JPY, pound USD. Then I'll look at indices. I like the DAX. I like the FTSE. I trade the DAX more than the FTSE. Gold, don't mind gold either. So I keep it pretty tight. Have a good look, see what's going on. Then once I've done that, look for direction. Well, once I've got the direction, I can then see where the price is in relation to the chart I've marked out. If it's in a trading arena, it's going to hit one level or the other. And if I've already predetermined that direction, I just need a reason to get in. So I've done a lot of work before the in. And that's what I mean by due diligence and doing your homework. The in is not the trade. That's 5% of it. In fact, it's not even 5% of it. And when you see all these amazing things, oh, look at my strategy and one thing and another, it means fuck all. Nothing. You make money from the homework, and you make money once you've pressed the button. Pressing the button is the easiest thing in the world. It's how you manage the trade to a positive or negative expectation, and it should always be planned. Cherish your thoughts. So as always, guys, trade well, keep your risk managed, but above all, do what you love, and the money will follow. See you all in the next one.